So the first question comes from Twitter, from Kirat Cursor. There's sort of two questions here. I'll throw them together. So how does the concentric outlook look beyond 2022, both within the US and around the world? And how are we scaling the concentric infrastructure to move beyond COVID-19? What goals and timeline are we looking at to achieve that?
Yeah, I can take that one. So first off, I'll say I've been hearing sort of like beyond COVID-19 for a couple of years now. So I think the reality is that COVID is going to remain something that for a lot of people, folks that are immunocompromised, folks with obesity, folks that are elderly, these are people that are just they're not going to want to get COVID, this year or several years from now. And that's before you get to the wild card of new variants, right? So I do think that's been a moving bar. And so again, I know it's political in the whole thing, but it's something to keep an eye on. It's not quite as simple as like a big black and white shift. In terms of where I think things are going, I think there are two things. One, I think we're going to see a move from active to passive monitoring. So the place where Ginkgo is playing, primarily, in the space of biosecurity today is in essentially regular monitoring of infectious disease, right? This is what we're doing in schools. This is what we're doing now, in the CDC program, in the airports as well. And eventually that should start to look like, a smoke detector. Basically would be the analogy, right? Something that is kind of monitoring, but not requiring you to do a lot. Today, it's like putting a Q-tip in your nose and dropping it into a tube and walking away. So it's not the most annoying thing, but it's still doing something. So that's one direction. I think, kind of passive monitoring, particularly in places like ports of entry, congregate settings like schools, is ultimately going to feel like a no-brainer. But those technologies do need to get built up. The other second area is international expansion. And so you've seen this, with our announcements in Qatar and Rwanda. We would love to do more internationally. I think you'll see us continue to do that. If you're tuning in today, from International Public Health, we'd love to talk to you. So I think that's the second area where I think you'll see us continue to grow.
Great. Thanks, Jason. All right, Matt Sykes from Goldman Sachs. I'm unmuting your line. Please go ahead.
Hi, can you hear me?
Yeah.
Great. Thanks for taking my questions. Jason, maybe the first big picture one for you. You talked about sort of the secular growth trend of externalization of R&D and manufacturing. And you've talked in the past about going after larger companies, competing against internal R&D, segments and people in that area. I guess I'm wondering, in terms of one concern those customers might have, a lot of IP is generated, intended or unintended in those R&D and manufacturing processes by those customers. How do you get comfort with those potential customers that they might lose that IP, and how can you transfer that, or how can you make them comfortable with that? Because I would think that might be a potential barrier towards externalization of R&D going forward.
Yeah, so this is a super good topic. And so the first thing I do want to point out is I think there are trends both in externalization of R&D and externalization of manufacturing. And, Ginkgo's focus is really around that externalization of R&D. Okay, right. So we're excited to see the externalization of manufacturing. We love to work with contract manufacturers and so on, but our focus is really on the R&D side. You bring up a great point. I mean, this is a conversation we have around every partnership we do, frankly, around how the intellectual property should work. Particularly, and I think there's two pieces to it. One is, do I even trust work happening outside of my four walls if it's on something sensitive like a new project? And, I think this would have been a similar concern in the early days of cloud computing. Like, do I want to put my data in someone else's server? It's totally insecure, yada, yada. So that there is a cycle there of just creating comfort around that security of the asset. Okay, so that I think we can get to just with time. The second one is Ginkgo has an approach, which is we want to retain the reuse rights to the intellectual property that is developed on top of our platform, not for your product, customer that we're working with, but for other things that aren't competing with that product. And, at the end of the day, we actually think that is a net good for the customer and their sector, because in biotech, we believe, as we look across the industry, we see a lot of IP which is siloed in many companies that could be helpful to the others, but the transaction costs associated with that are bananas, right? And so what we are able to do is use the leverage of our platform to force an IP regime where there's sharing amongst customers, again, not for their product, but for other products. And it's a different way to look at things. Honestly, I think it's how software basically played out. You see an enormous amount of kind of low-level code reuse across software. It's one of the reasons that industry developed so quickly. And frankly, I think biotech, needs to kind of grow up and move into a scheme like that. But that remains a fight. And the main way we do it is by showing the value of all the existing code base we have, plus the scale of our platform to convince a customer to kind of adopt that IP regime. And so again, we're excited to see that with large customers like Bayer and others, but it is still a fight.
Got it. And just one quick follow-up. Maybe Mark, help us maybe understand sort of mark to market on end market exposure by industry. It just kind of combing through some of the press release seems like there's been, maybe not intentional, but a pivot towards pharma and ag bio. And I'm just wondering, one, what does the end market mix look like today? And two, how does the end market approach you have inform your program risk sharing decisions that you make in terms of when you toggle upfront versus downstream? I would think in areas like biopharma, ag bio, where there's been more success traditionally with synthetic biology, maybe it might change your decision in terms of how you toggle that program risk sharing decision.
I can do the second part, Mark.
Yeah,
first.
You want to start, or
No, you go ahead. Do the mix today. Yeah.
Yeah. So in terms of mix today, when you look at the existing programs, the current active programs, it's pretty well balanced with growth, as you've noticed and as we've discussed, growth coming from the pharma and biotech sector. And then we saw pretty good growth year over year in the food and ag. But we do see, we have a pretty balanced customer mix across end markets. When you look at our pipeline and sort of expectation going forward, likewise, we still see that as being kind of pretty balanced. The way that we contract, Jason, why don't you, the way that we contract in terms of downstream value share and upfront absolutely varies by industry and even depending on the particular customer.
Yeah, I mean, that second point I think is the real material one, Mark, right? So a lot of it is dependent on the customer's interest map more even than the industry. And so I'd say the sort of filters on it are priority one is, what is the customer sensitive one way or the other? Okay. And you will find some customers sensitive one way, maybe they're really sensitive to royalties and they want us to do a bunch of upfront payments or vice versa. Startup might be more interested in back end, less upfront if they're cash sensitive, so you sort of have that. Then you have some companies that really don't care. Right. And so there's that's question number one. And then question number two is what's Ginkgo's current interest, right? Are we in a situation where we'd be, based on market conditions or otherwise, we'd be more interested in cash in the near term? Are we feeling sort of well protected with a big margin of safety and we're more interested in optimizing for bigger, high margin downstream value share in the future? That comes after the customer one, right? Customer is the priority because it's still the number one priority is getting new customers on our platform every day. And so does that make sense? So I wouldn't say it's so much like this industry or that industry. It's certainly, although I'd say there is general leans, probably more to do with customer size than industry. With the bigger ones more willing to pay more upfront and smaller ones preferring a little bit more on the backside.
Got it. Thank you.
Yeah.
Great. Thanks, Matt. Matt LaRue from William Blair. I'm opening up your line now.
Hey, good afternoon. So 13 programs added in the quarter and sticking with 60 for the year. Could you maybe just describe sort of what the line of sight is to that number? And as you're having conversations with folks contemplating coming on board, are there any customer categories by sector that are proving perhaps more or less sensitive to the macro uncertainty right now?
Yeah, so I can speak to the second part. You're answering to both, but in terms of I'd say how the macro uncertainty is affecting things. I think one, I do think it's just like generally you're seeing less R&D dollars spent, right? Like a lot of small biotech, say in the pharma industry, would be cutting, programs 2 and 3 in their pipeline right now, and sort of like doubling down on program number 1. Well, that ends up hurting kind of the service providers that would be providing any sort of research services into those programs 2 and 3, and those are that like that can affect Ginkgo, I would say. The flip side of that is stuff like we saw with the Bayer deal, where market pressures can also encourage companies to make that transition to move from having an in-house capability to really pushing that external. That's a very to me, that's the more important trend long term for us. Even if we see some headwinds on kind of individual R&D budgets in the near term, I'd probably take that trade. I think by and large, the much bigger issue for us is that 99% of cell engineering is still just done in-house, right? And so that's really what the battle I'm fighting, I would say. And then sort of path to 60. Yeah, we no update to that. We're continuing to scale on sales, and I think you might see us focus a little bit around. Well, I don't know. It's a good question. I mean, I think we've seen good progress with startups. We are seeing good progress in pharma. I kind of agree with Mark. It's pretty spread around markets. It's not like one certain area is on fire relative to others. So yeah.
I can give a little bit more color,
Yeah,
Matt, just in terms of like how we think about the path to 60. So there's really kind of 3 tiers almost when you were to look at our pipeline. So first of all, we've got existing customers that have already, in effect, earmarked money for Ginkgo programs, but we haven't yet defined that program, nor have we launched that program. And so that's money that's committed to Ginkgo, but we still haven't launched a program. And that's a source of new program growth in the future. The second would be an existing customer where they haven't yet earmarked money for a program, but we're in a conversation with them about what the next program could look like. And so all of that, sort of broadly speaking, falls into the category of really just expanding our presence within an existing customer. And then and those are in sort of order of ease with which or confidence with which we can land a program in a quarter. And then the third tier would be a new customer that has never done a program with us before. And so we have a pretty significant pipeline of conversations like that, but that's the hardest to land and the least predictable to land in a particular quarter because first of all, we have to establish the beginning of a relationship, and then we have to define a program and then launch that program in a quarter. So that's sort of how we think about it. And it's less about kind of industry, I would say. I would say we have a significant amount of effort across sort of all the industries that we play in, but we may devote sort of more effort to one or to a particular sort of tier just based on sort of how quickly we can get a program launched.
Okay, and then Jason, as a follow-up, you walked through the Zymergen and Bayer transaction. Well, both are, they're obviously different. Both involve harnessing capabilities that were formerly internally focused at each company and leveraging them with your assets and turning them external. So just kind of curious, neither are closed, but you referenced, outside interest in the Zymergen sale or spin assets potentially. What kind of outside interest or kind of industry chatter or customer chatter have you heard about those assets under your hood, and how customers might view working with you differently than perhaps they did before?
Yeah, I don't know. Anna-Marie, do you want to speak to this? I know you.
Sure. Yeah. I mean, obviously, deals haven't closed yet, and so we don't want to speak for Zymergen, but certainly we've been speaking with our customers about both transactions, and a lot of excitement, obviously, about both the expansion of capabilities as well as the strengthening of our platform. In terms of the inbound interest you referenced relative to the product portfolio, that's about as much as we can and should say at this point. But certainly real interest and an opportunity to see additional value there.
Okay, thank you.
Thanks.
All right. I will say on the with the Bayer asset, I think what's really exciting about that is, they had an in-house team that was, this is a group that was originally acquired as a company called AgRequest. These are folks that have been doing this for 10, 15 years in the ag biologic space, real domain experts, and they have a lot of assets, things like, again, I mentioned manufacturing and formulation, all this sort of stuff, but they also just know where the things that have worked and not worked in ag biologicals over the years. And so their domain expertise then with our leverage of our automation robotics to sort of speed that up, I think that becomes a really compelling story. So that's one of the things that's pretty exciting about it's not just facing it outward. That is part of it. It's also speeding it up by putting it on top of Ginkgo's platform. So I think together it's pretty cool. And there's nothing like it, in my view, on the market.
Yeah, thanks, Jason.
All right, Tejas from Morgan Stanley, I've opened your line.
Hey guys, good evening. Can you hear me okay?
Yeah.
Perfect. So maybe one on biosecurity, Jason, or perhaps even Mark. Have you given a samples per week sort of run rate exiting the quarter? I know you've given that in the past, just so that we can get a better sense of how things are trending through the year. You did about 250 million year to date in revenue. Your guide is sort of at least 260. So just curious as to what the exit rate was, and perhaps Jason, on your point on Concentric and the 60 million plus that it could accrue over time. Any sense of, from the new CDC contract, that is? Just curious as to any sense of the time frame for that revenue to come in.
Yeah, I'd be happy to take the first part of the question, the exit rate. So I think the best way to think about it is Q1 was very strong in the business to a large extent, was really hitting on all cylinders across the states that we were contracted in. Both April and May were strong. And then the first half of June, in effect, performed as we would have expected it to. But then you see a very significant fall off as the school season finished. And so you end the quarter or the latter half of June at really sort of a de minimis level of testing in the K-12 market. Now, we have some testing that happens outside of the K-12 market. It's relatively small. That was more kind of steady. We're expecting the same really in terms of July and August, and then September is more of an unknown for us. But the exit rate in the quarter, just to answer your question, I mean, we saw, as we expected, a very significant fall off because the schools just don't have need for testing through the summer months.
Got it.
And as a reminder, right, what we've been doing, I think we'll at least continue this for a bit on the biosecurity side, is just given it's political, we all understand this, and so we've been conservative in our guidance to say, tell you all what we kind of know have a sense, so we have a good shot of hitting, but let everything else be to the upside. And so we've done that for a few quarters now. I think that's served us well. Just to be realistic about the kind of situation on the ground with the schools and COVID.
Got it. That's helpful. And then one related to Foundry, and it's sort of a phasing question, but there's a near-term component and a long-term component, right? So in the near-term, Mark, I mean, you are calling for Foundry revenue to, I think you did about, it was mid-60s or so in the first half. You're looking to, do more than 100 in the back half of the year per your guide. So just looking at sort of any color on the cadence of that ramp, is it going to be sort of roughly equal across quarters, or is it sort of heavily back-end loaded at this point of the year? And then, Jason, on that point you made earlier around program choice and that being an important lever for you to pull, especially in the current market context and the focus on cash and break even, et cetera. Curious as to if that has any implications for the Foundry revenue ramp over the next 12 to 18 months or so.
So Tejas, in terms of second half of the year Foundry revenue, I would look at so first of all, there's a very meaningful contribution that we expect from downstream value share in the second half of the year. So that's sort of the first important point. And what that really means is I can't tell you today what the sort of Q3 versus Q4 will look like, because that, as you know, just by definition, can be very lumpy. And so, and there is uncertainty as to sort of when that lands. And so I think, I would just look at it as a second half as opposed to really trying to kind of parse the two quarters because of that. With respect to Foundry service revenue, I would expect that us more or less to be executing the rest of the year sort of in line with how we did in Q2.
And Jason, do you want to chime in on
the program choice? Yeah. So yeah, I mean, I think the point I was trying to get at there, I think there's an opportunity to offer like sort of more standardized services that then lead to, I would say like smoother ramping into Foundry service revenue. It comes with the challenge of like trying to sell a more standard service to a customer versus more of a custom service. Like the standard service could have the pricing be more standard, right? So instead of, hey, if a customer, wants more downstream value share, that's not an option, right? It's just more upfront, it's more fixed, right? That would make it, sort of easier to more smoothly ramp Foundry service revenue, but it would come at the cost of two things. One, probably some less downstream value share, and then two, which is more significant that we want to make sure we don't screw up, is making it harder to sell, right? You don't want to make it where people say, well, I really want this Ginkgo, but you're offering me this and you're telling me, it's my way or the highway. And they say they'll take the highway. So, we do want to be careful that, we're not getting too standardized, but that's what I'm getting at with that lever. And we are seeing it. I mean, we've been doing a bunch of these sort of protein CDK deals. Those are really great. It's in this vein. So I'm pretty bullish about where that could go, but I want to just be a little careful. I don't want to overdo it.
Got it. Thanks, guys. Very helpful.
Thanks, Tejas. Steve Ma, you'll be up next, but first I'm going to take a question that came in during the call into our investor inbox. Question is around Zymergen. Question from Sean: how do you plan on managing Zymergen's debt if the acquisition is successful? I'll go ahead and answer that question. So we had a slide on that. So the company actually repaid its piece of debt in the second quarter. As planned. And the only other sort of long-term liability of size is around their real estate, their long-term leases, which we addressed in the presentation today. And we will be looking to consolidate our real estate portfolio on the West Coast now that we'll have both our facilities as well as Zymergen's. So we'd hope to manage that over time. Again, we haven't assumed that we can, but it's certainly something that we'll look to do. All right. Anything you would add, Jason or Mark?
No, okay. That's clear.
All right, Steve, I'm going to open up your line.
Great. Can you hear me?
Yep.
Oh, perfect. All right. So a lot of ground already been covered, but I got a couple on biosecurity and then one on Bayer. But first on biosecurity, I know, Jason, you said that you're being conservative on the biosecurity guide, but what's your take on the anticipated return of flu this coming flu season? And can you confirm if you have a combination COVID flu test offering available?
Yeah, so I think if you look, early signs is that we're headed for a pretty bad flu season. And I think the challenge there is that's going to create sort of confusion, around what is COVID, what's not, what's flu, and so on. And then I do think, like I said earlier, I think we will eventually look back, at our current sort of approach to monitoring of infectious disease, kind of like we were all living in buildings without smoke detectors, and that seems crazy today because we don't really have the technology for like simple passive monitoring, like your phone just telling you if something new is in the room. But there's no reason that technology can't get there eventually. Like, the physics should allow for it. So I would say that, like, I think that sort of thing will come at some point. I don't think we've commented publicly on what we're doing yet in flu, so I don't want to say anything there, but I would say that eventually I do think that sort of thing should be present. And I think it should help distinguish between, flu and COVID so that ultimately you can keep congregate settings open in the event you have these sort of waves of infectious disease.
Okay, got it. That's helpful. Maybe just a follow up to that. What's your read on the level of commitment by the U.S. and other governments? Because I don't want to look back, I'm using like COVID testing as an example in 2020 and 2021, arguably the ball was dropped there in terms of deploying the COVID testing dollars and also, tests which are bought, just what's your sense on the commitment of the US government to biosurveillance going forward?
Well, I think the thing they announced today with the CDC is a great start. So I think, ports of entry seem, again, like another no-brainer thing, right? Like the idea that we wouldn't monitor infectious disease at these nodes where people are coming in from all over the world seems crazy. I think the monitoring you're seeing around wastewater that's more at the state and municipality level. I think that sort of thing is going to stick around, right? So, and then I do think you're also seeing dawning awareness, just around on like kind of the defense side of the house, right? Like that these are national security threats. And so you also need from a defense footing to be monitoring, just like we would have, we'd be monitoring for, missile defense, right? So we have satellites. It's one, we want to look out for weather, natural events that could be bad. We want to look out for missiles, right? Human intent events that could be bad. So I do think you'll see a sort of a mix where it's not just going to be public health. You also see DoD from a readiness and sort of monitoring standpoint getting into this as well.
Okay, got it. And then if I could sneak in a quick one on Bayer. So given the fermentation capabilities of the Bayer facility, will Ginkgo be performing manufacturing for other customers? And is that getting away from the core business of Ginkgo? And could there be any conflicts of interest with other partners from, IP or competitive fronts?
Yeah. So just for clarity, so it's sort of like a pilot, it's a pilot scale manufacturing. So I think the large, I don't want to get it wrong, but I would say it's 300-liter tanks is sort of where we're at there. So it's not, it's great for doing production of biologics to go into trials. It's good for very small volume things. But if you ultimately were going to go to large scale production, you would go to a different place. So no, I don't think it would be conflicting with our customers or any of our contract manufacturing partners.
Okay, got it. Thank you.
Thanks, Steve. All right, Rahul from Raymond James, I'm going to open your line, and just so everyone knows, we'll be ending at 5:45 p.m. Eastern. So we'll try to get everyone in before that if possible.
Hi, great. Can you hear me?
Yep. Good
afternoon, Jason and Marie. Mark, thanks so much for taking our questions. So I wanted to start with a two-part question about Zymergen. First, are there any specific new capabilities that the acquisition brought into Ginkgo? And second, with the 13 new programs this quarter, Ginkgo is clearly on track to meet its target of 60 this year. So given that Zymergen had its own pipeline of potential projects, could you please talk about whether or how Ginkgo could leverage its own relationships to go out and find partners for those programs that in turn would potentially accelerate Ginkgo's own existing pipeline so as to achieve the very large goal of 500 new projects in 2025?
Yeah, I can speak to those. So on the new capabilities front, I spoke to this a little bit, and if you want to really do more of a deep dive, I do encourage folks to look at go to our IR page, look at our video specifically on the Zymergen acquisition when we announced it. But one of the things that we have to do here at Ginkgo is continue to drive the scale of our foundries and thus reduce the cost of doing the lab work of cell engineering. The Zymergen team has invested in really flexible automation. In other words, sort of robotics that can serve many different types of lab processes and a really great software system on top of it. I think it's one of the things that can help us keep up with, Knight's Law here at Ginkgo to continue to scale our facility and reduce our costs, right? I also think it's really exciting to have the team that designed that and built that, coming on board to help further push that along. That giving them them thinking about the next generation of that and having the resources of Ginkgo behind them to do it, I'm also hopeful helps us get to yet the next stage of what we need. So those are the two things. I do think that is sort of, that automation is something that we would have had to, ultimately develop at Ginkgo, but there's sort of a speed up here by bringing in the team and tech at Zymergen. When it comes to their internal programs, Anna Marie mentioned there's interest in that externally. The only thing I'll say is, Ginkgo has a history of doing a lot of spin outs and basically taking product focused assets and getting them partnered up or in the hands of other people or into their own companies. So hopefully we can be helpful there. We would, of course, love to then serve that spun out entity as a customer on our platform where it makes sense. So I do think that's something where hopefully we can lend a helping hand.
Cool. All right, Michael from B of A, I'm going to unmute your line, although you just disappeared. There you are. Oh, there you are. And then we'll do one more question at the end before wrapping up.
Great. Can you hear me?
We can.
Yeah.
Okay. Great. Mark, I want to go back to a comment you made earlier discussing the Foundry outlook for the rest of the year and how much is from milestones versus core Foundry. I want to make sure I heard you correctly. You said something along the lines of executing core Foundry in line with 2Q. One, I want to make sure I heard that right. And then if I did, and we kind of look at 1Q core Foundry about 22 million, 2Q about 26 million, that implies something like 100 to 110 million core Foundry for the year. So that's a pretty sizable milestone in the second half, about 40 to 50 million. So one, if you can confirm the bridge there, and then is that a single milestone event? Is that multiple events? Just given it's in the guide, pretty critical that we kind of get a better sense of how that's going through. Thanks.
Yeah. So it's not a single milestone event. It would be more than one. We, as you know, and we've been very careful about not guiding to specific downstream value share versus foundry service revenue. Generally speaking, I would say directionally, your sort of math is correct. Fundamentally, we're not doing anything too different in Q3 and Q4 in terms of foundry service program execution than we did in the first part of the year. We are adding more programs, so keep that in mind. So we will be adding programs. We had a nice contribution in Q2 from programs that were added in Q1 in terms of foundry services. And so you can sort of extrapolate that thinking a bit to the kind of general math that you were doing. But yeah, it is, there is a significant contribution that we are anticipating from downstream value, from sort of multiple potential sources of downstream value share in the second half of the year.
Okay. And then that foundry service, I think we calculate, we call it, revenue per active programs, but I think we're kind of getting at that same point. Is that, you're in that run rate you had in 4Q, 1Q, and 2Q now has been pretty consistent. Is that sort of settling in at a level we should expect going forward? Just, not looking for 2023 guidance, but we're always looking sort of like for KPIs. We've got your KPI on new programs, active programs, but that revenue per program, is that zoning in on a region that you're comfortable with?
Yeah, I think so. I think if you take the quarterly, the sort of top level math that you're doing and annualize that is a reasonable average in terms of like how we think about it for the annual amount you might expect from a program. And then, as you know, our programs might be 2 to 3 years in duration. And so it sort of gives you a general sense of the size of the program. But yeah, I would say that there's nothing that I'm seeing, Michael, that's sort of surprising in that number. It could trend differently in the future, but right now it's sort of where I think we'd expect it to be.
Okay.
The only thing I might remind you of, Michael, is as we discussed a bit in the last quarter as well, depending on the stage of a program and therefore like the mix of earlier stage programs versus later stage programs and the structure of those programs, the revenue per program active in a particular quarter could vary, and that's not really what we're managing towards. We're managing for program execution. So I did just want to make sure that that's clear.
No, of course, recognize that. And yeah, it's just that over the last couple of quarters, that number has started to normalize a little bit. So we're always trying to get a sense of, is this a more appropriate point? But yeah, totally get that, Anna Marie. Thanks.
Thanks, Michael. All right, we're going to sneak one more in because I always like to get everybody in if we can. So Vivian from BTIG, you'll close us out.
Perfect. Hey guys, can you hear me okay?
Yeah.
Okay, hi. Thanks for taking the question. So just one really quick one. You mentioned international expansion on the biosecurity front. Could you just elaborate on how those conversations are progressing in the pipeline there? You also mentioned expansion to new pathogens as well. So just wanted your long-term outlook on durability beyond COVID. Thanks.
Sure. And before I do that, I will mention I said 300 liter. It's actually 3,000 liter tanks in West Sacramento at the facility. I was nicely corrected by Emily Greenhagen, who heads that up for us. On the international front, we, our general view is this type of kind of airport monitoring, things like that should be happening all over the world. I think, our model at Ginkgo is to do this through lab networks, right? So we've done that in the US. We think we can expand that internationally. So I think you'll just see us follow our same playbook to sort of build the same infrastructure out as much as we can internationally. There's not a lot more to it than that. I think we're going to learn as we go as to what, different, again, highly political, right? So it really varies based on different countries, but we have the experience of doing many states in the US, and each one of those, as you may notice, runs almost like a little country here in the US. And so we have a little bit of sense of that. And then I think the other thing you asked was about the what was it? The new
emerging pathogens.
New emerging pathogens. Thank you. Yeah. I mean, look, again, the idea is once you have this infrastructure in place, you could use it for monitoring for multiple pathogens. I think that's exactly the future vision here. Yeah. So I think you would expect us to do that over time, and hopefully that's something that governments would be interested in. It seems, again, to me, like a no-brainer. But yeah, that would be the direction we'd like to take it.
Thanks so much, Vivian. And thank you to everyone for joining us for our Q2 earnings, and we'll see you next quarter.
Thanks, everybody.